Karnataka Compulsory Gratuity Insurance Rules. What is gratuity insurance? And why am I hearing about it now? As per Section 4A of the Payment of Gratuity Act, 1972, every employer shall obtain insurance in the manner prescribed for his liability for payment towards the gratuity under this Act from the Life Insurance Corporation of India. In short, if the Payment of Gratuity Act applies to your establishment, then you must obtain an insurance policy to mitigate the liability of the employer to pay the gratuity. Now, the next question is, who is it applicable on? The Karnataka Rules 2024 is applicable on every employer, establishment, factories or plantation where the appropriate government is the government of Karnataka. This is not applicable to mines, as the appropriate government is the central government. Till date, only 3 states have implemented this provision, that is Andhra Pradesh, Telangana, and Karnataka. If your establishment is situated only in Telangana or in Andhra Pradesh or in Karnataka, without any other branches in any other state, and if the Payment of Gratuity Act is applicable to your establishment, then you need to obtain a registration under the state's compulsory gratuity insurance rules. But how is it only applicable to establishments in Andhra Pradesh, Telangana, and Karnataka and not the rest of the country? For this, we dive a little deeper into the provisions of Gratuity Act, 1972, specifically Section 4A.4, which empowers the state government to make required notification for bringing into effect the provisions of the Section 4A. And till date, only the states of Andhra Pradesh, Telangana, and Karnataka have done so. After you have obtained your insurance scheme, what is the next step? Do we just let it be in our records, or will we inform it to someone? Whether you are a new employer or an existing employer, if you have obtained the gratuity insurance policy, then you need to keep in mind the following. Once you have obtained the insurance, you need to A. Submit an application in Form 1 to get his establishment registered with the controlling authority within 30 days from the date of obtaining insurance, along with the list of its employees insured in Form 3. B. Every employer to submit Form 3 to the controlling authority whenever there is a change in the employees insured or policies or any other pertinent information. The obligation of informing the controlling authority is not a one-time process. Every time you renew your insurance scheme, you need to inform the same to the controlling authority within 15 days from the date of renewal of the policy. Every employer shall exercise all due diligence for on-time payment of the premium and renewal of the policy. As every law, there is one exception. If your establishment already has an approved gratuity fund that covers the entire liability of all the employees of the establishment, then you do not require to obtain an insurance policy towards gratuity. All you need to do is submit Form 2 to the controlling authority and get an approval for continuance of the existing arrangement. Are you an establishment or an employer, employing 500 or more people? If yes, then you also require to establish an approved gratuity fund and register a gratuity trust. What happens if you do not comply or violate the provisions? Where an employer fails to make any payment of premium, contribution to the insurance, to an approved gratuity fund, he shall be liable to pay the amount of gratuity including interest, if any, for delayed payments forthwith to the controlling authority. Employer who contravenes the above provision shall be punishable with fine which may extend to 10,000 rupees, and in the case of a continuing offence with a further fine which may extend to 1,000 rupees for each day during which the offence continues. What next? Here are the timelines mentioned in the mandate. If you're applicable for compulsory gratuity and haven't completed these processes, please contact us at Aparajita.